In the original HAMP program, principal forgiveness was always permitted, but was rarely used. In 2010, to encourage greater use of principal forgiveness for loans with loan-to-value ratios above 115%, Treasury supplemented the original HAMP program with the HAMP Principal Reduction Alternative, or HAMP PRA. HAMP PRA is an investor option, not a borrower option, and the HAMP program does not require the lender to offer principal reduction, even if the servicer determines it to be superior to the standard HAMP mod on a net present value basis, or NPV basis. The take-up rate on HAMP PRA has been low, and earlier this year, Treasury announced its intention to triple its current incentive payments to investors who use this approach. While both the original HAMP and HAMP PRA focus on a borrower's ability to pay by reducing the monthly mortgage payment to 31% of the borrower's monthly income, PRA also addresses a borrower's willingness to pay by reducing the loan balance. The rationale for the reduction in loan balance is that a borrower whose mortgage exceeds the home's value may not be willing to continue to make monthly mortgage payments. In other words, even though the borrower may achieve an affordable monthly payment, the ability to pay, through a basic HAMP mod, the borrower may not continue to have the willingness to pay because they are deeply underwater. By forgiving principal as part of the HAMP modification, the lower loan-to-value ratio should improve a borrower's willingness to pay. In fact, historical data has shown that the probability of default correlates with the borrower's current loan-to-value ratio. The higher that ratio, the greater the likelihood of default. So, by forgiving principal and reducing a borrower's current LTV ratio, the probability of default is reduced, and hence losses are reduced. This type of relationship between default and current LTV, supported by previous analytic work, in fact, is embedded in the HAMP net present value model and thus has been explicitly factored into FHFA's repeated analyses of principal forgiveness. Now, some proponents of principal forgiveness would limit eligibility in various ways, such as precluding it for cash-out refinance loans or loans that have mortgage insurance. There is no consensus on what such limits should be, nor does the HAMP PRA option impose any beyond the basic HAMP eligibility requirements. However Fannie and Freddie might apply principal forgiveness, it would have to be clear and transparent, having a basis in the conservatorship mandate and a general acceptance of reasonableness, if not fairness. And it would have to be clearly and publicly described so that more than 1,000 mortgage servicers could apply these rules the same way.